China is suffering right now with an electricity crisis that's causing blackouts throughout the country. This could be very serious and it's leading to economists cutting their growth forecast for China's GDP. Let's dig into it and its potential impacts on Alibaba. You're watching More Money, and let's get it. So the first thing that you guys have to know is that blackouts are not unusual in China. They do happen, especially during peak consumption times in the summer and winter. What's different this year, however, is that there are a couple of unique factors that have come together to make the situation much more severe than it typically is. You already know that the world is reopening after the pandemic and demand for Chinese-made goods is surging, which of course means that the factories that make those products need a lot of power. Well, under normal circumstances, that would be somewhat manageable, but the Chinese government's rules imposed to make the country carbon neutral by 2060 has actually forced coal production to slow down. So why does coal production matter? Well, because the country's power plants still rely on coal for more than half of their power produced. And compounding that problem is the fact that the government strictly controls electricity prices. So you got this perfect storm where coal-fired plants are unwilling to buy higher priced coal and produce at a loss. So instead of operating at full capacity, many coal-fired power producers have actually drastically reduced their output instead. Goldman Sachs has estimated that as much as 44% of the country's industrial activities has been impacted by the power shortages. And of course, as you can imagine, energy-intensive industries such as steelmaking, aluminum smelting, cement manufacturing, and fertilizer production are being hardest hit by the power outage. Guys, I personally believe that this is only going to further impact global supply chains. So what exactly is the Chinese government doing to resolve this problem, which, if we're going to be honest, is something that they did create? The National Development for Reform Commission, the NRDC, hasn't been very specific on what exactly they're doing, but they have announced that they will be working closely with generating firms to increase output, ensuring full supplies of coal and promoting the rationing of electricity. I personally think that the Chinese government will try an all hands on deck approach, which would mean significantly increasing its national production as well as increasing imports. So, problem solved, right? Nothing to worry about, right? Wrong. Importing coal will be much harder for two reasons. First, the government of China is said to be angry at Australia for calling for an international investigation into the origin of the COVID-19 pandemic. As such, China implemented a de facto ban on imports of Australian coal, which actually at the time left 70 vessels and 1,400 people stranded at sea offshore from China ports. Since then, the Australian coal production market actually pivoted and started exporting to India and Brazil. So if China wants coal from Australia, they will likely be paying a hefty price for it while simultaneously embarrassing the Chinese government for going back on their ban. That really doesn't look good on their government. Okay, so if importing coal from Australia is harder than first anticipated, surely they can get it from other countries, right? Well, yes, but coal supplies have fallen as major producers Colombia and Indonesia have struggled with heavy rain, while some mines elsewhere have closed because of the pandemic. And of course, it gets way worse because to further compound the problem, investment in new mining projects has almost come to a halt in recent years, with banks cutting lending to coal companies as the world seeks to avert the worst effects of climate change. So in other words, there's no real easy solution here. I really think the impact to Alibaba here is clear. With up to 44% of the economy being impacted by power outages, we could expect fewer products just being produced. This could absolutely slow the amount of commerce being done on the Alibaba platforms. So be careful, we are expecting some short-term pain that could last a few years. Overall, am I concerned? No. This isn't going to be a long-term problem. And what it really looks like to me is a buying opportunity spurred on by external factors. Additionally, guys, don't forget, Alibaba has a bit of a natural hedge on fewer products being produced and sold on its platform, which is that if those products are being sold at a higher price due to the demand and supply imbalance, Alibaba will pick up on the transaction charge that they take. Furthermore, guys, don't forget that Beijing has set a goal of doubling gross domestic product from the 2020 levels by 2035, which implies an annual growth rate of approximately 5%. They will only get to that goal by figuring out their way through this power shortage problem, which they absolutely will. This video was all doom and gloom, but I am a buyer of Alibaba, and there are some major catalysts which could take the stock much higher. If you haven't already, I really encourage you to check out the top 5 catalysts which could take Alibaba's stock much higher, which you can grab from right here. And if you want to see more research like this, please consider subscribing to the channel and smashing that like button. Thanks a lot, guys, and I'll see you later.